Trading is so much easier when you manage your risk properly. If you have a $5,000 account and you throw $4,000 into a play, and within a few minutes you're down 10%, you're going to start getting very, very frightened. But if you have a $5,000 account and you only put $1,000 into that play, you can think about that play much more logically. You can understand and look at things in a much better and more non-emotional way. So you can understand, hey, you know, I only put $1,000 in, we're down 10%. It's not a huge deal because we're at support currently, blah, 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 blah. All of these things will run in your mind. But if you put your entire portfolio or a large percentage of your portfolio, or you overexert yourself on a position, you will not think logically, and you will end up making emotional decisions based off of emotions and response. When you trade like that, you'll never, ever, ever end up making money. When you are a reactive person in general in life, things don't go out your way. When you're proactive, that's when things work out the best in your life. And the same thing applies to trading. So without further ado, I'm going to go over the SPY, the QQQ, the IWM, crude oil, the dollar, all of the crypto markets, and the other stocks that you guys wanted me to do technical analysis on. All right. So without further ado, let's get right into it. All right. Number one, yesterday I said that we were potentially at support yesterday on the SPY. The level that we need to hold on the SPY as support was going to be 413.67. 413.67, we ended up never even retesting it. But then what I ended up doing was, in this morning's video, I gave 418.25 as a key level of resistance that would need to break on the SPY, right? And sorry, not only did I say, you know, 413.67 was support, I showed that we were extremely oversold on the MACD, that the RSI was extremely oversold as well, and we were trading outside of the lower level of the Bollinger Band. So the Bollinger Band, the lower level of the Bollinger Band, trading in that zone it's very, very bullish in a bull market, because mathematically and algorithmically, the lower standard deviation away from the 20 exponential moving average, whenever we are this bearish, for example, here, when we are like that, right, there is always usually a return to the mean. So, or a return to the average price. So the average price is literally where we went back to today. This is literally exactly what happened in one day. Right exactly back to the 20 exponential moving average. From outside of the lower level to exactly right to the middle. All right, so it doesn't get any better than that. I was expecting us to maybe get a better fill around 413.70, but that never ended up happening. You could have bought calls as soon as we broke above 418.25. I could bring this up in a minute chart, and I could show you guys. This trend line is going to keep moving around, but hopefully it stays. All right, so here's literally, all right, so look how clean this is. It breaks 418.25, okay? And say, for example, it broke 418.25 and you buy, right? Boom, you automatically bought some, and the next minute it goes all the way up, whatever, right? But then the next minute it falls from 418.45, and what is this? Yeah, it fell down to 418.22. So it's 3 cents below, right? You never sell if it falls 3 cents below. What you do is you have a stop loss somewhere either at 418.09 or down here at 418, period, right? You never have a strict stop loss, because literally what they're doing here is they cross it above, right? But they want to cross it back down below 418.25 to get people to sell due to stop losses, right? And hopefully you didn't do that. And as you can see, it traveled. Travel is a bad word, but it went all the way up to 418.82, sold off a bit, came to retest 418.25 perfectly, right? It stayed above it. And this is the 20 exponential moving average on a minute chart. And yeah, it bounced off of that, and we just went higher ever since. And then this level of resistance which is the March 2020 bottom. This is the trend line. Currently, like, it was acting as perfect resistance. We bounced off of that to the lower side. Then we broke above it a little bit, but by that point, the market was a bit more overextended and needed some rest. Also, look at it. It was 11:51 p.m., right? Eastern. Usually close to 1 o'clock, that's when people take lunch. So usually there's a small sell-off. Usually, like, new highs don't happen during this time. It's either in the first portion of the market or the final portion of the market. The middle is usually when, you know, it's stagnation and lunch. All right, and that's exactly what happened. We just, you know, people were just like taking profits. We saw we held support above these levels here. We just like consolidated a bit, and then we broke above with strength. We broke above with strength. We went even higher, and then we retested perfectly, and then just chopped around, and now here we are. All right, that's the SPY on the 1 minute chart. I told you guys the level on 418.25. These are the trend lines that I continue to show you guys every day, and it's not for naught. Like, I don't just share these random trend lines for the sake of just drawing stuff. It's literally to show you the market responds and trades around these levels. These are very, very important levels. To draw this trend line now, what you do is, all right, go scroll out and go all the way to March 2020 and create a bottom, connect it on March 23rd, right? And then make another connection to March 4th, 2021. And the third connection should be around May 19th. And then just extend that line, and you can see that today, you know, yesterday we fell below it, and then today we just crossed back above it, and now we're trading here. All right, so go ahead and draw that on your line as well. Sorry, no, it's not March. It's not May 19th. It's just, you just connect March 4th and March 5th, and you extend it, and that's where we are now. Okay, so yeah, it worked out perfectly. I got messages from people saying that they made a lot of money because they crossed above 418.25 and they bought calls, and it worked out. So now what we need to see is, this is extremely bullish move. The MACD barely even moved upward, but it crossed in a very, very strong way. Okay, so now the levels that we need to watch for tomorrow are going to be 422.82. 422.82 is also in confluence with this trend line here. Though we overextended all the way over here, the break of this trend line back in April when the SPY crossed above 400 was very, very important. And that's essentially in confluence with this the 422.82 level. So on the SPY, the 422.82 level is going to be very important to the upside. Obviously, this trend line for tomorrow, approximately 420.71, is going to be support, and then back to 418.25, which would be support. So yeah, I mean, the SPY had an amazing day. So yeah, that's my analysis for the SPY. Let's just quickly go into my analysis for the Nasdaq. The Nasdaq didn't really move much. That's why I said not to go short the Nasdaq. I know that everyone was saying that it was overextended. I know that everyone thought that, hey, you know, the Russell fell so heavily, but the Nasdaq is still, you know, trading around here. Maybe we should short the Nasdaq, because if the Russell fell, then the Nasdaq has to follow too. Not necessarily. I was saying that, you know, the fact that so look, a few days ago, we were very overbought on the MACD. And I said, to remain in a bullish formation, we need to consolidate above these levels of support and give room for the MACD to cool off. And it did cool off. It became oversold. And what happened was, now we're crossing above. Okay? So we have yet to cross above to the upside, as you can see, with this line. but we are still in a very bullish formation. This is a bull flag, and we literally held these levels of support perfectly. So obviously, because the SPY also shot up, it brought the Nasdaq up as well, which is really nice. The level of resistance that we need to watch on the Nasdaq is the prior all-time high at 346.38, and the three levels of support that we would need to watch on the Nasdaq are these three levels here. But yeah, essentially overall, the Nasdaq looks very bullish as well. There's my analysis on the Nasdaq. Let's look at the IWM. Look at how oversold the IWM MACD is, and look at how amazing of a green move we saw here today. All right, it really does not get any better than this. I said that 228. Oh no, I said 224.09 was the level of resistance for the IWM today. And look at how, just look at this. Like, again, I could go into the minute chart, go into everything, but look at how beautiful this is. It crossed above and it went all the way up to 227.50 today. And again, it literally bounced exactly off of the 20 exponential moving average. I mean, look, like right now, it's not a swing traders market specifically for these reasons, because you know, we have one big green day, one big red day, etc. Blah, 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 blah. So that's why I try to give you these levels, and you can scalp against those levels. But scalping against these levels is not going to work if on the first time it cross, you're like, oh, whoa, he said 224.09. All right, I'm going to go all in. As soon as we cross 224.09, I'm going all in. That doesn't work because you start thinking illogically. And then if you're down 5% on the position, but we still haven't even like fallen down to support, it can make your mind start racing, and then you'll end up not thinking logically. Okay, so you need to really, really fix the way that you are, your risk management. Your risk management needs to be on point in order to day trade and scalp. Okay. So overall, the MACD is very bullish. We're still super oversold. The level of resistance that we need to watch on the IWM is exactly this 20 exponential moving average at 227.43. Then it's going to be the 23.6% fib level at 228.08. And yeah, once we cross those, then this can potentially be this already looks like a bull flag, but once we cross above this and hold, then this is a much cleaner, better looking bull flag that could potentially bring us all the way up to a break of this high here. Can potentially bring us all the way up to like 245 soon. All right, so just keep your eye on the IWM as well. But again, the level of support that we need to hold is 224.08, and then it would be 220. So just be careful. Because, one day we can become super bullish. We found support. Oh my God, look, we returned back into the Bollinger Band, blah, blah, blah. But, it can be taken down just as easily. Yeah, the Bollinger Band is actually getting very tight. And when it does get tight on the SPY, let me see how it is on. Yeah, you can see that the Bollinger Band is tightening up. So that is very nice for a potential explosive move. So yeah, man, just be careful for that. This was a really nice move to everyone that caught it. And yeah, there's my analysis for the three main indices. Now I'm gonna do analysis on the US 10. Yeah, no, not really. The US 10-year yield. Let's talk about the dollar. So obviously, I said that the dollar would most likely take like a break. I think I said like it would take like a day off or something. I don't even remember. But I said that, the dollar I think would take a break or a rest. And it did, which is why the overall stock market bounced, because the dollar had a red day. So yeah, we can see the effects of that. So now 91.6 and 91.37 are extremely important levels of support on the dollar. But as you can see, we are extremely overbought on the MACD. Remember, on the SPY and the QQQ and the IWM, we were not nearly as far away. But that's how bad of a distance we are from the dollar. But what might end up happening is, you know, this could potentially be a bull flag. We can consolidate a bit here. And again, similarly to the Qs, you know, wait for the MACD to cool off a bit and just consolidate, hold these levels of support, and shoot back up. So that's what we have to wait and see if that can happen potentially. So yeah, just be careful for that. Crude oil. Crude oil has been going back and forth. It broke out of a rising wedge, then it broke below, then it reclaimed it, and now it's back within inside the rising wedge pattern. But overall, I mean, crude oil is just amazingly bullish. When crude oil is doing well, that means that the overall stock market is going to continue doing well. So yeah, crude oil looks very, very nice. And yeah, that's basically it. Now I want to do my analysis on Bitcoin and the crypto markets. Okay, so here's what I think might happen overall. Let me go ahead and take a sip of water. All right, currently Bitcoin is trading at a trend line with multiple touches. So back a few weeks when it made the huge red day, I connected that trend line starting there on May 19th and then to June 8th. And obviously I just extended it to the right, and now here we are. We're trading exactly at that trend line. This trend line needs to hold, but what might end up happening is we could break below a bit lower, have people you know, liquidate their shorts, and then we could break a bit lower than 30k. But the fact that we are so oversold on the MACD and we are approaching extremely oversold on the RSI is very, very bullish, in my opinion. So right now, this is literally just a way of, in my opinion, making people shake out and sell their Bitcoin so that it can potentially fall below 30,000 into the 20s. So I said to, you know, set an alert for approximately 28,000 and buy a small amount down there. And then what might end up happening is if we do fall to, you know, 28 or 29,000, right? It's kind of difficult, but 28 to 29,000, right? Set an alert for whatever. Yeah, sure, 28,000. But we're going to fall potentially below 30,000. And we're going to find support maybe for a good bounce because we are extremely oversold. If the MACD looked like this and we were overbought, you see how overbought we are right there, the MACD, right? And we were at the support level, that would be extremely bearish. But the fact that we're at support, very oversold on the MACD and almost very oversold on the RSI, it's a very good, strong possibility that if we do break this level of support, we can hold above 20 to 29 for a potential bounce, right? And that bounce would end up retesting this trend line here. We could break above it and retest this trend line here to 33,000 potentially. But then by that point, we need to see how the MACD has responded to that. If the MACD responded in a very bearish way by like shooting up like crazy compared to the move in the price action of the actual stock price, right? That would be very bearish. And then what might end up happening is we would fall much lower, right? But now it's just a matter of seeing whether or not this trend line holds, whether or not 30,000 breaks. And yeah, that's really it. Overall, if you did have this is look at this. This is a bear flag. This is a very, very bearish pattern. If it breaks down below, this could be very, very bad for Bitcoin in the near term. But it's a good long-term buying opportunity if you are a long-term investor and you don't really care about you know, the day-to-day money. So yeah, just be careful. And those are the levels to watch. I would like to buy much heavier around 24,000. So if Bitcoin ever hits 24 to 26,000, I'm definitely going to buy 100%. A bit heavier. And then if we freaking fall down to 20,000, then I'm gonna I'm gonna refinance my house, maybe, and go even deeper potentially. I mean, if we fall down to like 10 to 15, then I'm going to, can't say this on YouTube, but yeah. Yeah, man. I mean, those are the levels to really get and catch Bitcoin. If you don't have any right now, I would wait to see if we like hold above. But yeah, overall, I mean, this is really it. This is the important trend line. We need to see if we hold above 28. No, sorry, we need to see if we hold above 30. And yeah, that's really it. Just be careful on Bitcoin, right? Ethereum, obviously, it's not doing well at all because Bitcoin's not doing well, and the same with the other altcoins. Yeah, you know, Litecoin, XLM, all of these other altcoins are not doing well, obviously, because Bitcoin is having trouble. All right, so now I'm gonna go into all of the stocks that you guys want me to do technical analysis on. All right, first of all, Apple had a rising uptrend, right? It looked very, very bullish. We were rising upward, and we periodically fell today. We retested the support around 128.76 or 79, right? And then we reclaimed this trend line and we closed above it. Similarly to, you know, what happened on the SPY, we reclaimed, we reclaimed this trend line, right? So it's essentially this very similar to Apple, and Apple is heavily weighted in the SPY. So that's why, you know, Apple has a green day, the SPY has a very green day as well. You could actually see their percentage increases are almost identical. 1.41% on Apple and 1.43% on the SPY, right? So Apple overall looks pretty good. So the support level for tomorrow that needs to hold is approximately 130, 134, which is this trend line. So just watch for 130, 134 and 128.90 as the two levels of support. The level of resistance is obviously going to be the high from June 17th, which is 132.55. So that's the level to watch to the upside on Apple. All right, Twilio. This looks like the beginning of a rising wedge on Twilio. You know, the level of resistance that we need to break for these are so far out. I mean, it doesn't really matter right now, but the closer term level of support is going to be this close at 360.97. So 360 is going to be a very important level of support. And then obviously today's lows at around 353 are going to be very important. And then obviously today's the resistance levels are going to be today's highs at 368.80. And then yesterday's highs at 372.86. So if we were to cross that, then the next level of resistance is going to be around 381, okay, on Twilio. So overall, what might end up happening is, you know, also you have to look at the MACD. The MACD is extremely overbought. That is not a good sign. So the MACD is extremely overbought. We're outside of the upper level of the B band. So you already know what that means. Usually what happens is we do return back in. So what could end up happening is we can consolidate a bit, hopefully, you know, find support at this lower level of the trend line. And then, bounce up higher. But that's basically it. Well, that's what's going on Twilio. We need to just monitor those levels that I just shared. And yeah, overall, Twilio did have a very strong move. So let's see if it can continue and consolidate a bit, similarly to what I shared with the Nasdaq and something else I forgot. But the dollar, the Nasdaq and the dollar. So basically, let's see if we consolidate a bit more. The MACD cools off a bit because it's very, very overcooked. And potentially, if the MACD can get closer or become oversold, while Twilio maintains this bullish pattern and stays above this trend line and really stays above, what is this, 347, that would be very, very bullish for Twilio. So yeah, I would definitely just watch for those levels. And yeah, that's that on Twilio. All right, HCMC. It's clearly holding 10-cent support pretty well. The B bands are not existent on this stock because it's very illiquid. And yeah, you can see, what the hell? Damn, it's crazy. This is crazy. But yeah, so I guess the levels of resistance are going to be, so you can see that the 10 simple moving average is in confluence with the B band line, which is the 20 exponential moving average. So that is a level of resistance that you need to continue watching. The main level of support is this 10-cent level. As long as that holds, and obviously you can also see that it's starting to become in confluence with the 200 simple moving average. So that's another good sign. We are very oversold on HCMC, and the RSI is flat, which means that, you know, if we do find and sustain support, we can pop upward. So yeah, just those are really the levels to continue watching on HCMC. But, you know, overall, I hope this play works out for you. This is not really like a good tradable stock, but I mean, look, if you get another pop all the way up to 50 cents, then who's complaining? So yeah, but yeah, hopefully 10 cents remains holding. If 10 cents doesn't hold, then they might shake it back down to 9 cents. Then yeah, just keep your eye on that, okay? On HCMC. So HEPA, very, very bullish move on HEPA, in my opinion, because we remained above the 38.2% fib level at $2. We were very overbought on the MACD, as you can see right here. We had a huge move, right? Very overextended. But what didn't happen is we didn't fall back down all the way. We consolidated in a very bullish way, and we remained above the 38.2% fib level, which is very, very bullish. It's still considered bullish if you hold above the 618 level at 184. But the fact that we're still trading above $2 at the 38.2% fib level is amazing. So as you can see, we consolidated long enough for HEPA to not only get out of overbought, but to become very oversold now. So we're oversold, you know, bounced off of support. So now the level that needs to break is 212. And then, you know, if we cross above here, then essentially we can see, you know, 270. So yeah, overall, still really bullish move on HEPA. $2 needs to hold. Then, you know, the make or break level would be 184 to the long side. So, I mean, I wouldn't be surprised if this would get taken down to 184, but overall, this is a very bullish hold on HEPA above $2. And as you can see, I mean, just look at the RSI. The RSI looks like a bull flag too. So, yeah, overall looks very, very bullish. LKCO, I could be wrong, but I'm almost positive I said that we might end up hitting 270, or I said 270 or 280 we would end up hitting soon, potentially, right? And we ended up doing that. This was, look at how beautiful of a move this was. This was a bull flag. So, all right, let me go ahead and take this out. We broke out of this triangle. We broke out, we retested the lower level, and then we just catapulted upward. So once we catapulted upward, we consolidated a bit above the 10 simple moving average, and then just had a huge green day, and it continued on into today. And now we're a bit overextended here, obviously. So what now needs to happen is, unless we have another crazy move to the upside to like 350, right? What might end up happening is we're going to consolidate a bit, wait for the B bands to, you know, to trade inside the B bands once more, and wait for the average to come back. You can see this is a very bullish move. The MACD is not even as overbought as it was before. The MACD was more overbought over here when it was trading at 227 than it is now when it's trading, when it closed at 254. So just look at it that way. We're down here. but the MACD a few days ago was up here. So now if LKCO was to also bring where would the price of LKCO be if the MACD is now going to be at the same place as it was before, right? So basically that's the way to look at it. So that's why I'm saying that this is a very bullish move. So yeah, LKCO looks really, really bullish as well. Overall, a lot of these stocks that you guys showed were really nice. The overall stock market, oh wait, what happened to Bitcoin? Yeah, Bitcoin just fell another $100 to $200 while I was recording the video. But yeah, that's basically it. Just follow all of the levels that I shared on the SPY, QQQ, and IWM. Those are going to be the nice scalping levels that you guys have to adhere to. And yeah, aside from that, I'm sorry if I rambled a bit, but it is what it is. Anyway, I hope you guys enjoyed, and I hope you guys got value from this video, and I will see you guys tomorrow. Have a great day.